G'day traders, today we're going to talk about doing your own D.O.S. analysis. Stay tuned, we'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Today we're going to talk about doing your own D.O.S. analysis. Now, D.O.S. stands for dangers, opportunities, and strengths. And it's critical that I try to do this on a weekly basis. I just review what I've been doing. I'm always trying to simplify. I've got a very basic approach to the market on the end of day and the hourly system. Now, essentially, they're both the same. I look for some very simple price action setups. I look for certain triggers. During the day, I look at only certain times of the day. But I'm constantly going back and testing that in terms of going over trades, reviewing my strategy bar by bar, trying to simulate game conditions, real life game time conditions. So it's important that you conduct a D.O.S. analysis on yourself periodically, weekly, monthly, daily, whatever you want to do, but it's important in your preparation and in your monitoring of your performance, just in general, looking at how you yourself are performing. So for me, one of the dangers that I found myself was definitely trying to day trade using 5-minute charts. I found that there's a lot of hidden little loopholes in there. When I was on the 5-minute charts, I lost track of the bigger trends and the bigger pictures, and I got caught up into the price action. And oftentimes, because of the volatile nature on the shorter time frames, that led me to other impulsive, irrational, and illogical emotional behaviors with my stop losses, averaging into losing positions, taking too much leverage on, moving my stops, not placing a stop, thinking that brokers were going to run my stops on a spike movement, just all kinds of crazy things. And the other thing that I found on the shorter time frames is that I would get into a trade, it would take off, and then I would get greedy. So, you know, if I was risking 20 pips and it had already moved 30 or 40 pips, and not having some levels established in terms of when to exit the market, I would hold on to that trade wanting to get 100 pips. And then that market would stall and consolidate, and I think it would go up, and I go to bed, the New York session would open, it's Perth, it's nighttime in Perth, and I'd get up in the morning and I'd be stopped out at break even, or if I hadn't moved my stop to break even, at a small loss. So these were little behavior patterns that I recognized for myself were a danger. And these are the things that you want to try and identify and eliminate them from your trading. Wherever there's mistakes or dangers, try to minimize or eliminate them completely from your trading plan. Now, the next thing for me was the opportunities. Well, I recognized through the experience that I had and the different approaches that I had to the market, I recognized where my best opportunities were taking place, and that's how I've basically simplified my approach to using, if I'm on the intraday charts, I'm on the hourly charts. I only look at certain times of day when Europe, London opens, and when the New York session opens. Partly that's to do with the time frame that I'm in. I'm not interested in Asia. But I look, because I know that going over hundreds and hundreds and hundreds of charts, that the same things happen week in and week out on the hourly charts after London opens. So I simplified my approach. I wanted something that was duplicatable, and I knew that there was opportunity there. There's lots of movement once the banks come into the market. I recognized some of the simple approaches that I was using could have a high possibility of being successful, while at the same time being able to manage my risk appropriately so that I could identify that trade, place my limit order or my market order and my stop immediately, as well as a target. So that was where I recognized opportunities. And I take that same model and I apply it to my end-of-day system, and the same thing applies there as well. I can identify my maximum amount of risk. I try to look for 2, 3, 4 times or greater the reward to risk, because of the monthly ATRs and the ranges of the end-of-day charts. So I recognized for myself, in terms of how I wanted to trade, that that's where my greatest opportunities lie. And for me, the strength. So You want to be able to identify your particular strengths that suit your temperament, your trading approach, your availability to be at the screen. Like I've said this before, I want to spend as little time possible at the screen. So even with my hourly charts, I don't do it every single day. But the end-of-day model is very simple for me. I've been able to code my scans into Metastock so I can scan that data and then go. I usually will go through all the charts manually anyways because my data is a bit delayed, but there's usually a window, probably an hour or so, where Asia sort of goes into a range with the market makers before it starts to trade anyways. So for me, that was where I saw some of my strengths. The way that I approached the market, the most important part for me was to be able to identify my risk parameters based on some sort of price area, and then know that my maximum risk exposure would be a certain percentage of my account size. So these are the things where I saw that I had my greatest success on my winning trades, and I tried to eliminate all where the bulk of my destructive behavior habits occurred were on the short time frames and on the shorter 5-minute charts. So I basically eliminated that out of my approach to the market. So, risk management and simple price action strategy, for me that was critical because I'm not looking to have all kinds of trade signals. What I'm looking for is some very simple basic price action triggers that show up in the markets that I feel are high probability signals for me. I can identify my maximum amount of risk based on the chart and then take a percentage of my account and allocate it towards that trade. So that was where I saw my strengths. So do a D.O.S. analysis on yourself, traders. It's all about trying to eliminate mistakes, focus on your strengths, using that to get better at your trading and align yourself and get the congruency in the results. So I've mentioned this before. If you haven't done so, go to my homepage, get my 7-step daily routine for high performance traders. Cultivate the daily disciplines and habits that are going to help you keep getting better, not only in your trading, but in all the areas of your life. Hopefully you got some value out of today's video, traders. Stay disciplined, stay focused, do your D.O.S. analysis, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.